Hi there, this is Mr. Chauke. I'm a teacher for accounting. If you're watching this, thank you for watching. Please don't forget to share this lesson with your friends. Share as much as possible as you can, and I promise you that will make your academic problems a thing of the past. Let's get into the lesson. Here we're given an income statement, and it's for grade 10 learners. I'm using this to prepare you guys for the project that you are going to write, because it is going to include the income statement as well as some of the notes to the balance sheet. So it's very important that we try and do our best to make sure that we understand. So now here they're saying the information provided below is extracted from the records of VLE collections. Their financial year ends on 31 December 2019, and they're saying that the business uses a profit markup of 60% on cost. Okay, now this information to us is very important. If our financial year ends on 31 December 2019, it means it started on 1 January 2019. Very important. Understanding when your financial year starts and ends is very important. And here they've given us some information about the markup. What is known to us is that our cost price is always 100%, and then according to here, our profit is equals to 100 is equals to our profit is equals to 60%, right? So meaning that when we charge people our selling price is going to be our cost price plus the profit that we want to make. In this case, our cost price is 100%, and then our profit is 60%. So this means that our selling price is equals to 160, the sum of your cost price plus the profit that you want to make. And that's how you determine your selling price. This information is going to help us a lot when we do our calculations. So now here they're saying complete the following financial statements for the year ended 31 December 2019, like I said. And here we are required to prepare the income statement, and it's supposed to give us 42 marks, and this should be done in 33 minutes. And you cannot be doing this in 33 minutes if you don't practice. But obviously for me, because I'm explaining, I'll take a bit longer than the required time. So pay attention as I explain. So now, firstly, when you do income statement, one of the things that you need to be sure about is your format. You must know your format by heart. It's very important that you know the format by heart. Remember, items in the balance sheet section, we use them when we prepare the balance sheet. We are only going to use a couple of some accounts from the balance sheet, like your trading stock. When we do trading stock deficit, your debtors control, when you update your debtors control, and also determining the new provision for bad debts, that's when you're going to use that. And also some information regarding depreciation, you're going to use some account, your vehicles, equipment, and accumulated, depending on the type of methods of depreciations that you are given. But in a nutshell, items that are in the nominal section are the items that are supposed to be recorded in the income statement. So please make sure that you know what to include in the income statement. Okay, and for me personally, this is what I do when I teach learners. I teach them to know that they need to start by entering firstly the accounts that are given in the nominal section, so that at least should you not finish, you are able to score some marks. Okay, so we're going to start with that. Here, according to this information, our sales is equals to 400,380, and then we are going to start by that. We're going to start by entering our sales, which is 400,380, and then once we are done with a particular item, we're going to tick it off so that we can remember what we have used and what we have not used. So this one, we have used it. Cost of sales 240,000. We are also going to enter it now. So remember, sometimes you will not be given this format. So cost of sales is 240,000. We are also going to enter it, and we'll move on to the next one. Next one, we are given debtors allowance. We know that debtors allowance is supposed to be subtracted from the sales, as we were taught by teachers. So this 1,980, you immediately come here and subtract it on sales, 1,980. Okay, because it's supposed to be subtracted from the sales so that we are left with net sales. And then also you check what else do we have. You are given water and electricity for 4,950. It is an operating expense, so it will come under expenses, you check if it was entered for you. So you see it was not entered, so we have to write it. So we're going to write water and electricity, and I think it's 4,900. And then you go and check what else you are given. Please also make it a, okay, it's 4,950. So it's very important that you verify your figures. Okay, so I'm going to correct that and write 4,950 here. So always make sure that you verify your amount. So it's 4,950. And then from there we can move on and go to other things that are given to us, other accounts. So we've used water and electricity, and then let's also check advertising if they wrote it for us. I don't see advertising, so it means that I'll have to write it here. So advertising, and then let's also check the amount. The amount according to this is, the amount is 5,900. So I'm going to enter that 5,900 here. Okay, and then from there I'll go and check the next expense that is given to me. I'm also given insurance as 3,890. So I'm going to write that insurance if it's not included here. So I'll write insurance 3,890, and then I'll then proceed to go and check the next account that I have here. So I've written this. I now have rent income of 20,800. So I'm also going to write that under my incomes. So you need to know what to include and what not to include. So rent income 20,800. By the time you watch this lesson, I want to believe that you are familiar with the structure, so I won't really be explaining much on the structure. Okay, so 20,800, and then we also have vehicle repairs for 3.3. so we also go and check remember it's an operating expense, so we'd have that vehicle repairs it's 3,300. and then we go and also check what else is given to us. We are told that we have commission income of 19,000, so we're going to enter it. Commission income is part of other operating income, so we're going to have commission income here. Commission income as 19,000 according to what we are given here. And if you also check, we also have we are given stationery as 4,520. We need to check if that has been recorded for us. Okay, so stationery 4,520. You can see there's no stationery written here, so we'll write that stationery 4,520, and then from there we'll proceed to the next one. We also have our packing material 2,110. Okay, so do we have packing material here? Is not written, so we'll have that packing material 2,110. And then you can also go and continue to check what else you are given. We also have interest on fixed deposit. Interest on fixed deposit is an income account, so it will be entered under operating under interest income here. So remember, we'd have interest income, and then we would write 2,000. So far we are not given anything about interest expense. According to this, we can confirm, but if you check on the debit side, there's no anything about interest expense, and we have already used every account that is here under the nominal section other accounts were omitted because they were entered for us. Okay, so there's no need for us to stress about that. So once you are done entering these things, you are halfway through with the income statement. All you need to do is to now know how to record the adjustments. So now here they're saying the owner withdraws stock to the value of 1,072, and they're saying that this is the selling price, and before the physical stock count taking was completed, and then this transaction has not been recorded. So now remember here what is happening. The owner took stock for personal use, and every time in accounting when something happens, we need to be able to ask ourselves which accounts are affected, right? Remember, when an owner takes stock for personal use, he or she does not take that stock at he or she does not take that stock at a selling price, but rather at a cost price. So here you are not given the cost price. You need to calculate it. If you remember, we were given information about the markup, and remember they told us that I said that our cost price is always 100%, and according to this information our profit is 60%, so meaning that our selling price is equals to 100 plus 60, which is at 160%. So meaning that if I want to get my cost price will be equals to, remember I want to be able to calculate my cost price, and it will be smaller than this. So I'm going to say 100 over 160 of the selling price times the selling price amount of 1,072. Then I'll be able to get my cost price. Okay, so now let's do that calculation here. I hope you'll be able to see this as I share with you. So 100 divided by 160 and then multiply by 1,072, it's giving us 670. So meaning that the cost price is equals to 670. So we need to ask ourselves which accounts are affected whenever the owner takes stock for personal use. Remember, it's an increase to drawings. Drawings are increasing, and when they increase, they reduce owner's equity, and it's a minus to trading stock. Remember, this trading stock has not been recorded in the stock that is available in the trial balance, so it still includes this 607. So this means that I need to update my trading stock account so that I can have accurate figures. And then once I've updated that trading stock that is in the records, which is shown in the trial balance, I'll then be able to check whether there's a deficit or shortage. So we're going to do that now. So let's check our trading stock at 6,580. This is the trading stock that is in the records, right? That's going to be 6,508. Now we need to subtract the 670. So if we minus that 670, how much are we going to be left with? So let's see, 6,580 minus 670, it is giving us 5,910. Okay, 5,910. So whenever we get we do trading stock deficit or surplus calculations, we'll need to come back to this. It's going to affect that calculation, so we'll come back. So now here they're saying according to a fiscal stock taking, the following were on hand at the end of the year. Trading stock that was on hand was 4,300. So you can see the actual stock that is really available is less than what we were expecting. So this tells you that we are going to have a trading stock deficit, which is supposed to be an expense. Okay, so we're going to go to that trading stock deficit calculation. So here we're going to have trading stock deficit, and then we're going to take that, remember that mini calculation that I did on the question paper here, this calculation here, 6,580 from the trial balance minus 670, we are going to need it. 6,580, and then we minus the 670 of the stock that was taken and not recorded. Then we compare this to the actual stock that is available. If you remember here, they said the actual stock that is available is worth 4.3, so meaning that we're supposed to subtract 4,300 here. Okay, So we subtracting this. You can see when you take this minus this, it gives you 5,910, which is less than this. So it means that you are experiencing a shortage of stock, probably because the stock was stolen. But we will do final amounts after all transactions. So let's go to the next one. Next one here, they're saying stationery on hand 950. Anything that's on hand on the income statement, you're supposed to subtract it. So remember, the stationery, according to the adjustment, it was 950, right? So stationery, we are going to come here and say minus 950, and then you'll be done with that stationery. And then we go to the next one. We have packing material. They saying that we are left with a packing material of 340. So we need to subtract 340 on the packing material. Remember, what we are trying to get is the cost of the things that we have actually used when it comes to your trading stock, stationery, and consumable stores. We are trying to find out what was the cost of what was actually used, not what was actually bought. Okay, so that's why we are subtracting what was actually not used to get the cost of what was actually used. And then we'll be done with these transactions. The reality is that you might get one or two of these, so practice how to record when they're saying information is on hand. Okay, so now here they're saying, and also one thing to remember, when you do the balance sheet under the inventory section, you are just going to add all these accounts and make them one amount and put it under inventory. This is how you will earn easy marks. Okay, so now here they're saying an amount of 11,800 for repairs to one of the vehicles was debited to the vehicle's account, and then we need to correct the error. So what they've done, they've increased our vehicles by 11,800, which here you're not being asked. So what must you do? Account to come and do the correction here. We're supposed to less than that, and we'll go to our ask yourself, how are you going not yet paid? Accrued, you remember all expenses that are payables. So remember, dealing with the income statement. Okay, the reason why we are not being paid, the amount for insurance include paid in advance for the next paid insurance. We paid this year, but we are paying for next year. Now, matching principle says to us that our incomes and expenses should be matched. Incomes of this year should be matched with the expenses of this year. Now, this expense is for next year. It has nothing to do with this year. So this means that we must reduce our insurance by 800, and this will be identified as a prepaid expense, which will be an asset under trade and other payables. So in insurance, we're supposed to subtract this 800 in the answer sheet. Okay, so we're going to go to insurance here and subtract that 800 because it has been prepaid, hence we are subtracting it. And then next, we are told that advertising includes an amount of 1,400 for a 4-month advertising contract. So remember the duration. The duration is what? 4 months, right? So we need to firstly determine how much were they paying each month. So if we say 1.4 divide by 4, it will tell us that they were paying 350 per month. So remember here they were paying 350 per month, right? And then here they're saying the contract runs from November until February. So it was only supposed to cover November and December. So January and February are prepaid. Okay, so we need to subtract by these 2 months. So you can just say, if you say 1,400 times 0.50, it will give you the half that we are supposed to subtract. Remember, 350 times 2 is 700. So it means that it was supposed to only be paid for 700, but we paid 1.4, which also includes the 2 months from the next the 2 months for the next year. So we're supposed to subtract the 700. It is also regarded as a prepaid expense. Okay, so we're going to minus the 700 here under advertising. So we're going to say minus that 700. And then from there, we'll move to the next section. Here they're telling us that provide for outstanding interest on fixed deposit. Outstanding, it means that the interest is owed to us. If an interest is owed to us, it means that we did not receive it and we were supposed to receive it. So it could be that whatever interest that they've given you on the trial balance, that interest is short, is not complete. Okay, so how will we know? I'll look at the fixed deposit that we have here. Remember, if they're saying that you are earning interest of 10% per annum, it means that you are earning on what you have invested. And for us to be able to check if our interest is complete, we are going to use the add principle. Add says that when we refer to add, we're saying A is for the amount, okay, and R is for the rate, and then T is for the time. So in that case, our amount is equals to 40,000, and then our rate is equals to, let's check what we given here. Our rate is equals to 10%. It will represent, and our time will be out of looking for the interest. 10 over 100. So 4,000 multiplied divide by 12. It says we were supposed to get an interest of 4,000. So meaning that our interest income was supposed to be 4,000. So we need to go back to our answer sheet and check what we were given. So remember the total for interest income here, it's supposed to be 4,000. Right, our interest income for the year is supposed to be 4,000. So how much are we short to reach 4,000? We are short by another 2,000. So it means that they only paid us interest for 6 months according to the information that we were given. And then from there we'll then proceed to go and check other adjustments that we did not consider. And when it comes to this, you need to practice doing these things quickly, okay? Because remember, you are given around 33 minutes. So here we are given the loan statement that we need to interpret, and they're saying that our interest is capitalized, which is our question mark. Now for me, what I teach my learners is that when you're given something like this, just remember that it's your opening balance plus your interest minus repayments, and then it gives you the closing amount. So if you want to go to the top, what are you going to do? You are going to do the opposite of everything that they've done. You will take your closing, you plus your repayment, and then you minus your closing, then it will give you the interest. So we are going to do it like that. So our opening amount is 105. I mean, our closing amount is 105,000. So we're going to take that interest expense. When we calculate it, we'll do it like this. Interest expense. So we're going to say 105,000. Remember, is the closing balance, and we add the repayment. How much was the repayment? Remember, we're doing the opposite of what was done. It was subtracted to reach here, so we're going to add. So we're going to say plus 40,000, right? And then we're going to minus the opening balance of 130,000, and it will tell us how much is our interest expense. And this transaction will carry a lot of marks. So 105,000 and then plus 40,000 minus 130,000, it is giving us 15,000. So meaning that our interest was 15,000, and this is how you get your 15,000 for interest expense. This is, we used what we call the bottom up approach, meaning that starting from the bottom to go to the top to get what you want. Okay, if you have any question, you leave your questions on the comment section. Now here they're saying that depreciation is calculated as follows. On 31 December, equipment is calculated at 10% on cost. This is simple. They did not buy anything, they did not sell anything, so it's not going to give us a problem. And for vehicles, they are saying it's 15%. They are using diminishing balance method. Now when they say 10% on cost, all we have to do is to check what is the cost price of equipment. Remember, our equipment, according to here, our equipment is 100,000. So we're going to say 100,000, which is our cost price, multiply by 10 over 100, and then multiply by 12 over 12. Okay, so remember 10% of 10,000, it's, let me confirm the rate. 10% of 100,000 is 10,000. So we're going to have 10,000 as our first depreciation amount. The second part, they are saying that on vehicles, they calculate on carrying value. So meaning that you have to get your carrying value first. Remember, our updated cost price is 200,000, right? So we're going to say 200,000 minus our accumulated depreciation of vehicles, which is our accumulated depreciation on vehicles is 40,000. So we're going to subtract that 40,000 first. Okay, so we're going to subtract that 40,000, and then we'll be left with 160,000. Now on this 160,000, we are going to multiply it by, I think it's 20 over 100, and then multiply, is it 20 or 15? Oh, it's 15 over 100. Sorry about that. So we're going to multiply it by 15 over 100, and then multiply it by 12 over 12, because all these vehicles were with us for the entire year and nothing was sold. So if you say to do it in a shortcut, you just say 160,000 multiply by 15%, divide by 100, because 12 over 12 is 1. You are getting 24,000. So our total depreciation is going to be 10,000 plus 24,000, and we'll be done with our adjustment. So when we go to depreciation, we're going to say depreciation, and then would say 10,000 plus 24,000 thousand that we calculated, and then we'll get, it will give us 34,000. Okay, and then from there we can just try to go and close off all our amounts so that we can look for totals. Okay, so now we also need to consider, I think, the rent income adjustment. I nearly forgot about it. So here they're saying that rent income has been received for 13 months. So remember, keyword is received. So meaning if they're saying we've received it for extra months, it means we must subtract. So all you have to do is to take the rent income amount that you are given here. Here we're told that the rent income is 20,800. So now if you say 20,800 and then you divide it by 13, it's going to tell us how much we were getting each month. So we're getting 1.6. So meaning that we need to subtract 1,600 from this. So we're going to say subtract 1,600, and then it will give us how much we are supposed to have. Okay, and then from there we'll go to the last adjustment. The last adjustment says that they're saying that an amount of 1,000 is outstanding for commission income on 31 December. If they're saying it's outstanding, it means, remember we're talking about commission income, it means we are the ones who are owed commission income. So when we go to our answer sheet, we're going to add that 1,000 under commission income. This will be part of our accrued income in the balance sheet. So total income that we're supposed to receive, it's 20,000. Okay, then we can come and do our totals here. So let's come back here. Let's start with our sales. I'm going to try and put that calculator here. I think if it comes here, it will make my work easy. So 400,380 minus 1,908 is going to give us 398,400, right? Now, if you look at our cost of sales, it will not change because there's no debtors returns, so it will not change. And then our gross profit, remember, it's our sales minus cost of sales. So if we say 398,400 minus 240,000, it will give us 158,400. That's how you get your gross profit. Remember this one minus this one. Normally I show how I do this in brackets, but because I'm limited on time, I will not be able to do that. But I believe because I've been explaining, you'll be able to understand. Now we'll then proceed. Let's do our rent income. 20,800 minus 1,600 is giving us 19,200. So we're supposed to have 19,200 here, and you come here and add. Remember, we're saying other operating income, we're supposed to get the total of this. So if we say 19,200 plus 20,000 is going to give us 39,200. Okay, and then from there we can proceed and try and add our gross operating income. Gross operating income is equal to your gross profit plus your other operating income. So the answer that we got here, and then plus 158,400, it will give us 197,600, right? And that's how you get it. And now remember, we're going to move to our operating expenses. Operating expenses by their nature are supposed to be in brackets, so we will just add the ones that have not been added for us. Let's just check if we did not repeat anything. Wages and salaries, telephone are not here, so it means we did not repeat. Okay, it's fine. So now let's finalize our water and electricity so that we can get final amount. So 4,950 plus 450 is going to give us 5.4. So that 5.4 will come here as a final amount. Okay, and then we need to close this also so that we can show that we are done. Okay, so we need to close this and also this one. Once you are done, close your brackets. So let's continue. 5.9 minus 700. Okay, so 5.9 minus 700 it's going to give us 5.2. So that 5.2 will come here. Okay, and then 3,890 minus 800 is going to give us 3,090 cents. So and 90 rand, sorry. For me, the way I pronounce these numbers, it is to help me to not make mistakes when I write. But when you pronounce them, please use the right academic language. Don't pronounce them like me. Mina, I'm a teacher. So yeah. So 3,300 plus 11,800, it's going to give us 15,100. And this one, because you are correcting errors, will have many marks also. And then 4,520 minus 950. So 4,520 minus 950, it is giving us 3,570. And then also 2,110 minus 340, it is giving us 1,770. And then we are then going to do the trading stock deficit or surplus calculation. This one, remember, is a deficit because it is under expenses also. Ne? So now we are going to say 6,580, and then we say minus 670, and then we subtract 4,300. It will tell us that deficit, which is 1,610. So now you can see that once you are sure with your structure, calculations won't be your problem. So please capitalize on understanding your structure. So let's do calculations for all these total expenses. But for this, because we are talking about many figures, I'm going to do it twice to verify, right? So now let's start. 65,000 plus 4,050, and then plus 4,000 plus 5.4, and then plus 5.2 plus 3,090 plus 15,100, and then plus 3,570 plus 1,770, and then plus 1,610 plus 34,000. It's giving 1,42790, but I will write it here. So 1,42790. I'll write it here and confirm if my answers are still correct. So you also need to verify when you do this. Okay, so let's do it again. 65,000 plus 4,050 plus 4,000, and then plus 5.4, and then also plus 5.2 plus 3,090, and then plus 15,100, and then plus 3,570, and then also plus 1,770 plus 1,610, and then plus 34,000, 1,42790. So it means our answer is correct. So I'll just write it here, 1,42790. Okay, and we are then going to look for our operating profit. Remember, operating profit is profit before interest. Is the profit that we're supposed to have before we consider our interest income. Okay, so let's see, 197,600 minus 142,790. It is giving us 54,810. You can see this 197,600 minus 142,790, which is giving us 54,810. So that 54,810 will come here. Okay, and then when we take this 54,810 and then we plus it with our 4,000, it will give us profit before interest expense, which is 58,000 58,810, and then from this we are going to subtract our 15,000, and then it will give us our profit for there, which is 43,810. And then you are done with this. I would have loved to show you guys the memorandum, but I will just try and see if I can open it now. But this is roughly how you're supposed to do an income statement. And even if you make a mistake somewhere, you will still be able to get some marks. But because this is my first lesson on the income statement, I was just showing you how to do it. Okay, I'll then go and check if I can open a memorandum. Okay, let me see if I can get a paper one memo somewhere. Possible answers. Now, my advice to you is that don't always rush to look for memorandums without practicing, because you won't understand what you are supposed to do if you don't practice first. It seems the memorandum does not want to open because I'm also recording, so unfortunately, okay, I'll pause and open it. I finally managed to open the memorandum. So the only difference that we have with them is here their depreciations. They used, I don't know where they got their figures, because when I calculate and still check, it doesn't make sense. Remember the first part, the 10% of our equipment according to the question paper here. Remember they said it's 10% on cost. So if you take 10% of 100,000 here, it will give you 10,000. For them they have 12,000. So I don't know where they got that 2,000, because there was nothing new bought also. So I think it was just an error on the memorandum, which was corrected just after this was released. So, and then also I saw that on the vehicles their amount is 20,000, whereas it's supposed to be 4,000. I mean it's supposed to be 24,000. So I don't know how they made that mistake, because if we subtract that 11,800 of the error, will be left with 200,000, and 200,000 minus the 40,000 of the accumulated depreciation will give you 160. And if you take 160,000 and you multiply it by 15 over 100, as I was doing it here, let me show you. Remember we had 200,000, right? 211,000. We had 211,800, and then we corrected that error of repairs that they added to this. We were left with 200,000, and then here they're saying accumulated depreciation is 40,000. So if you take it and say subtract that 40,000, you'll be left with the carrying value, which is 160,000. And if you take this 160,000 and multiply it by 15 and multiply it by 15 divide by 100 and multiply it by 12 divide by 12, it will give you 24,000. So it means that the error is from their side. But let's say it happens that you had done it the way that I've done it, you were gonna be credited because the mistake of the amounts in the memo was not from your side. So this is how, in a nutshell, this is how you are supposed to do an income statement. Focus on what you are given, use what you are given. Remember, when you write, you don't have the memorandum, you have the question paper only. So please make sure that you use what you are given. If there are any errors, you'll be credited for that because it's not your mistake. Thank you so much. God bless you. Don't forget to share this lesson with your friend and loved ones. Bless you.